Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The Sensex and the Nifty rebound to end the session at the day's high. The Nifty closes above 25,650. The Nifty Bank outperforms. IT stocks see a sharp recovery in late trade. The 5-day AI Impact Summit kicks off in New Delhi, from French President Macron to OpenAI CEO Sam Altman. Top policymakers and tech giants all set to brainstorm on shaping a sustainable AI future. CNBC-TV18 will report live from the venue of the summit through the week. AI giant Anthropic expands its India footprint with a new office in Bengaluru. CEO Dario Amodei says India is the second largest market for the company's chatbot Claude, and business run rate has doubled in the last 4 months. TCS expands its AI partnership with chipmaker AMD. Both companies will offer a data center blueprint to support 200 megawatts of capacity. Plan to work with AI companies to accelerate data center infrastructure in India. Global private equity giant Blackstone backs homegrown AI cloud startup Neysa, infuses $600 million by leading a fundraise worth $1.2 billion. Neysa's CEO tells CNBC-TV18 the funds will be used to boost computing infra. RBI tightens the rules for lending to capital market intermediaries. Stock exchanges, brokers and clearing houses to be impacted as the street fears some moderation in overall trading activity across select cohorts. India's first AI company, Fractal Analytics, lists at a 3% discount on its Dalal Street debut. Shares of Quality Walls listed a 26% discount after the HULD merger. Ola Electric shares plunged to a record low, revenue down 55% in Q3 as the EV maker battled several issues with its products and servicing. Market share declines from nearly 25% last year to just 6%. The US and Iran set to hold another round of talks in Geneva tomorrow. Iran is ready to discuss compromises to reach a nuclear deal, says the country's foreign minister. President Trump has warned of traumatic consequences if a deal is not reached. Well, a positive start to the week on Dalal Street. The Nifty and the Sensex closed at the high point of the day. This after a sluggish start, the Nifty closing above 25,650 and the Nifty Bank up 762 points, 200 points higher there on the Nifty. The Sensex up 650 points. Nifty IT also closed in the green, but just about succumbing off its intraday low. That was the story, thanks to a late rally that we saw after losing over 8% last week. The Nifty IT index was battered. Prashant standing by to wrap up the day's market action. Prashant, closing in the green and some relief coming in for the IT stocks as well.
Well, some stability finally coming in, and the IT index recovering from the day's low, not quite all the way into the green, but smaller mid caps, etc., doing well. I'll get to stocks in just a bit. Reliance, of course, is the other leg which did well, and that is the reason why by the end of it, the Nifty had about 1% to show for it. The Nifty Bank almost around 1%. You had the mid-cap index, which was up and about. The small-cap index was flat, not very much. Market breadth overall more declines than advances, but it got better and better as we went into the close. So the Nifty, 25,680. Remember, it was precariously positioned on Friday's close around 25,450, which basically was a support. A break of that would have invited 25,100 kind of levels. But we've seen a bounce today, so let's see if this holds now. As far as the large caps are concerned, Power Grid continues to do very well. It's moved up 50 rupees in the last 10 trading sessions or so. Coal India was another one, 3.33% higher. And you had HDFC Bank, which was up about 2.25%. Up today. Now, Tech Mahindra down 1.33% was the biggest loser. Bajaj Finance was down over 1%. Maruti was down about 1% as well. So that's essentially the Nifty part of things today.
All right, Prashant, many thanks. Now, the AI Impact Summit kicked off in the capital. The 5-day summit will see top policymakers and tech giants from French President Macron to OpenAI CEO Sam Altman all brainstorm on shaping a sustainable AI future. CNBC-TV18 will report live from the venue of the summit through the week. We are the first channel to go live from a specially crafted studio. Take a look.
This is what it means when you say that India is the AI talent capital are rapidly becoming, a skill and talent capital for AI.
What AI does to jobs, is that something that will also be a part of the conversations that we have here?
I mean, we had a working group on human capital, which describes or which discusses both aspects, both in terms of whether jobs, what it will do to jobs, one part, and the other part, what kind of reskilling and retraining you need, and what kind of skilling do you need to future generations to make sure that they are AI ready for their jobs.
Well, the CEO of the India AI mission, Abhishek Singh, expects AI semiconductors to be designed in India in the next 3 years. Speaking to CNBC-TV18, Singh played down the fears of a SaaS apocalypse as he expects AI to create more value for IT services in the long term.
Stock market movement should not impact long-term strategy and long-term planning. So these things keep on happening in the markets, like stocks go up, stocks go down, that will happen. But looking at the Indian industry, we need to look at the opportunity that is coming in the AI transformation services. Of course, business will not be as usual. With the disruption that AI is causing, there will be need for building more capability into agentic AI, there will be need for building in more capability into physical AI, edge AI, providing AI transformational services, building agentic AI capabilities. A lot of skilling, reskilling requirements will be there, and Indian IT industry is planning to address that gap from what I have heard from all of them. So while there might be feeling that in short term, some services are getting disrupted, but in the long term it will lead to creation of more value, because the strength that we have is our talent, and no other country will have as many companies and as many engineers building AI transformation services.
Well, that's the action from the AI summit, but the big headline coming in is Blackstone's bet on AI in India. The global private equity giant has agreed to invest $600 million into homegrown AI startup Neysa. Blackstone led the funding in an overall round worth $1.2 billion. Speaking exclusively to CNBC-TV18, the co-founder of Neysa, Sharad Sanghi, said funds will be used to ramp up their compute capacity. Neysa plans to deploy 20,000 GPUs in India.
They being such experienced investors in the entire AI ecosystem space, we thought they will help us in all the aspects of AI. So in addition to the capital, which is of course needed, they're also going to help us in supply chain resilience with data center availability, with GPU availability, and also with the learnings that they've had. Capital deployment will largely be in GPU infrastructure. We want to build sovereign AI infrastructure in the country, and as and when we need it, we will deploy more and more capital. So it's $600 million in equity and $600 million in debt that they will arrange for us. They've already got, through their banking relationships, they've arranged $600 million debt for us. So as we scale, our vision is to build several inferencing clusters across the country, initially in India, and then maybe even in Asia Pac.
Well, that's the Neysa fundraise. And staying with the AI summit, Yotta Data Services and chipmaker NVIDIA expected to announce a major expansion in the AI computing capacity in India. Speaking with CNBC-TV18, the company's CEO Sunil Gupta said, "This is India and the global South Asia moment. The company aims to raise nearly $1 billion to bolster its computing capacity." Take a look.
India's AI movement, and I would say it is India's and global South India AI movement, because the constraints in which India works, the frugal economy which always India follows, that India is able to take a technology, takes it to a very, very large scale, bring the prices down, make it available to masses in a very cost-effective way. The same constraint and the same ecosystem is prevailing in the whole of Global South also. This is a moment, this is the first, by the way, summit of AI which is happening in the Global South at a scale which is unprecedented. So it is India's AI movement, and this is Global South AI movement as well. We have already invested more than $1.5 billion, right? I'm not talking about the money which is going into the chips as we are speaking about. The newer chips will require another $2 billion worth of investment. And as you can assume that if you are making these type of these type of investments, which is futuristic, with the returns of which will be coming over a period of time, you not only need to raise debt from the banks, but you also need to raise capital, equity capital. We are already in our pre-IPO round. If everything goes well, we will be in the public market with the IPO within this financial year itself.
And And there's more. AI IT major TCS is expanding its partnership with chipmaker AMD. Both companies will offer a data center blueprint to support 200 megawatts of capacity. Rachna joins us now to explain what this partnership is about and where we see it headed. Rachna.
Right. AMD and TCS have expanded their strategic partnership. They've announced to bring the next-gen Helios rack-scale AI architecture to India with the intention of targeting large enterprises and sovereign AI demand. Now, the company said that the platform will support an AI-ready data center blueprint scalable up to 200 megawatts. The deployment will be driven through TCS subsidiary Hypervolt AI Data Center Limited and is aimed at hyperscalers, AI firms and large enterprises that are now moving from AI pilots to production scale. Workloads, the Helios stack will run on AMD Instinct MI455X GPUs next gen, Epic Venice CPUs, Pensonado Volcano networking and the ROCm open software ecosystem. Now, all of these are designed with an intention and an aim to improve performance efficiency and reduce deployment timelines in simpler terms. But the timing is significant here because India's India AI mission has committed more than 10,000 crore rupees toward building domestic AI compute capacity, while industry estimates suggest that the country's data center capacity is set to more than double this decade. Now, large AI clusters have high power demand, making rack scale high-density designs extremely critical. So this announcement also builds on TCS's deeper push into the AI infrastructure layer. Because in November 2025, if you remember, TCS secured a $1 billion investment from TPG to accelerate Hypervolt, which is the subsidiary, and the broader commitment was of up to 18,000 crore rupees to build gigawatt-scale AI-ready data centers in India. So taken together, the AMD TCS Helios move now reflects a broader shift because now the focus is moving beyond models and pilots. It is now towards the harder problem of compute, power and scalable domestic infrastructure. Back to you.
Well, that's a significant development there for TCS and AMD. Many thanks, Rachna, for joining us. And here's a quick programming note. Sam Altman, OpenAI CEO and one of the key architects of the AI revolution, will speak exclusively to CNBC TV18 from SaaSpocalypse fears to the future of data centers to the long lingering question, will robots replace humans? Sam will be in the hot seat on CNBC TV18 as we ask him to chart out the AI future. If you have questions, send them to us with the hashtag AskSam. From OpenAI to Anthropic, the CEO of AI giant Dario Modi is in India to attend the AI Impact Summit. Today, he was in Bengaluru to announce the company's new office, which is its second in Asia after Tokyo. Anthropic CEO said India is the second largest market for the company's popular chatbot Claude. Modi said Anthropic's business run rate has doubled in India in just the last 4 months.
Anthropic's business, its run rate revenue within India has doubled over the last 4 months since I last visited. On Claude Code may have grown even faster. We're just going through the ability to kind of build software with AI and build as kind of developers on top of AI and build new applications and I think again just the kind of efficiency of the market here, the energy of very large numbers of people wanting to, find something and build something. I think that greatly exceeds, what I've seen anywhere else. You shouldn't build for where the AI models are now. You should build for where they are in a year or two. If you're a large enterprise, if you're, a big effort trying to build something, it's going to take a while to actually deploy and test things. So you should be imaginative about where the technology is going to go. Don't build for step 4 out of a 10-step workflow. Try and do the whole workflow, even if the AI model isn't quite capable of it yet. The companies that have understood that, the kind of users that have understood that, I think have gotten much further ahead than others, and they kind of see the future because they're able to use models in ways that correspond to a product that we haven't released yet. And I think on software, we're starting to go more end-to-end. The models are starting to do multi-stage workflows, and, humans can step into the role of supervisors and, accelerate themselves by a factor of 10x to 100x. I think we need to kind of let 1,000 flowers bloom and try a bunch of different approaches in a bunch of different locations in the world and a bunch of different parts of those industries. They're big industries, and there's room for dozens of startups in any of those areas. So I think it's a very exciting time.
Well, that's Dario Modi of Anthropic. Now, Infosys is expected to lay out a new strategy for AI at its Investor Day tomorrow. While speaking to me at the World Economic Forum in Davos just a month ago, CEO Salil Parekh had said the company will highlight how AI will boost revenue growth and margins. Take a look.
In February, we will do an Investor Day where we will outline in a little bit more color what the specific revenue opportunities are.
Could you give us a little bit color before you get to your Investor Day on what these revenue opportunities could potentially look like?
So what we are seeing is a good set of these 6 revenue opportunities. Another example is in customer service, where we see a lot of AI agents working to change how customer service works, customer experience, even more than customer service. Then there is we will also share there are some places where there is a compression in revenue. What we are seeing across the industry in terms of tech services. And what we have started to see now is the growth opportunities larger than the compression opportunity over a number of years. And that's what we want to showcase.
Well, all eyes on Infosys for its Investor Day tomorrow. We'll head into a break, but up next, Ola Electric shares plunged to a record low. Revenue down 55% in Q3 as the EV maker battled several issues with its products and services. That when we return. Fractal Analytics made a tepid debut on the Lal Street. It is India's first AI company to list on the bourses. Fractal listed at 876 rupees a share, which is lower than its IPO price of 900. The company is an open-source data analytics platform. It became a unicorn in 2022 after raising $360 million from private equity firm TPG. Quality Walls also went public today after the HUL demerger. The stock listed at a 26% discount with a market cap of 7,000 crores. The ice cream business accounts for 3% of HUL's annual turnover at 1,800 crore rupees. Now, the Reserve Bank of India has tightened rules for lending to capital market intermediaries. The new rules, which will come into effect from the 1st of April, require credit facilities to be fully backed by eligible collateral and subject to strict monitoring. Ritu joins us now with the details. Ritu, take us through the new rules and the likely impact.
That's right, RBI has tightened the norms around lending to capital market intermediaries, including brokers. And these are not draft rules, these are directions that are going to kick in from the 1st of April. Now, the rules say that banks can now only lend to capital market intermediaries that are registered and regulated. Second, every rupee of lending to brokers and similar entities is now going to be classified as capital market exposure, and that means it falls under stricter exposure caps as well. Now, here's the big shift. Banks are completely barred from funding proprietary trading, or that is allowing brokers to buy securities for their own books using bank money. So that door is effectively shut now, but market-making finance is allowed. But interestingly, the securities involved cannot be used as any collateral. And if banks give guarantees to brokers for exchanges, at least 50% collateral is mandatory, with 25% of that in cash. Now, all such loans will also have to be 100% secured. And if equity shares are pledged, banks will also have to apply a minimum 40% haircut. So in terms of the impact, there's no two ways about it. The circular is tough, especially on proprietary traders and the F&O segment in particular. Now, HDFC Securities, for instance, told us that since proprietary activity accounts for nearly 40% of F&O volumes, trading volumes there could decline by as much as 15 to 20% when the circular is implemented. Citi says it is premature to gauge the overall P&L impact at this juncture, but brokers, clearing members and exchanges are likely to be impacted. JM Financial says that this may reduce bank funding access and result in higher trading costs for brokers.
Ritu, many thanks. Now, the Ola Electric stock plunged to record lows after a dismal Q3. Revenue down 55%. The quarterly loss of 490 crores is higher than Ola's revenue. The market share down to just 6%. Sudarshan is standing by with what has been a debacle there for Ola. Sud.
It's a weak set of numbers that Ola Electric has presented for Q3 FY26. If you talk about revenue, it has halved. And if you talk about the bottom line, company has reported the amount of loss, which is much more than the revenue that company has reported. And it has happened for the first time in several quarters that the amount of loss is more than the revenue. And what has dragged the numbers? Two things. First, volumes have been seeing fall. In Q3 also, volumes were down 61% YOY and down 38% sequentially. And if you talk about the market share, in the month of January, company's market share has fallen and it's below 6%. And if you compare against January of 2025, that time company's market share used to be around 25%. And from that level, that's a huge fall. And another factor that's dragging the numbers is the employee cost. On a sequential basis, employee costs have almost doubled to 92 crore from the level of around 52 to 55 crore. Now come to the headline numbers. Company has reported loss of 490 crore versus the loss of 560 crore, and revenue is down 55% YOY. Even on a sequential basis, there is a fall of almost 32%. EBITDA loss has narrowed YOY, but on a sequential basis, there also it has seen an increase, and it has reported EBITDA loss of 271 crore. If there is one silver lining, that's the improvement that company has reported on the gross margin front. In Q3 FY26, gross margin has come at 34.3% versus 18.6% YOY and versus 30.9% sequentially. Now coming to the stock. Stock is trading near 52-week low. And if you talk about the brokerage views, the lowest target price brokerages have is of 20 rupees per share and highest is of rupees 55 per share. So even from this level, brokerages are saying further around 25 to 30% fall in the stock price.
So many thanks for joining us. Well, with that, it is time for us to wrap up this edition of India Business Hour. We will be right back with you after this very short break. Stay tuned. Well, with that, it is time for us to wrap up this edition of Business 360. Do stay tuned to CNBC TV18. Plenty more coming up for you right after this short break.